Elf Beauty has been soaring the last couple of years, absolutely going from strength to strength. Is this company the real deal? Is this the stock that people are not talking about, that they should be talking about? As it continues to grow and grow in popularity, also got to the stage that it's totally overvalued, and we should be looking at new metrics. Elf Beauty, today we're going to do this at Barry Charles. We're going to do a stock analysis, and with the key metrics being revenue, net profit, earnings per share, the PE ratio, look at the free cash flow, long-term debt, and so much more, as we look to find out if we can find at the end of this video the intrinsic value of this beautiful gem of a stock, Elf Beauty. So let's get to it. Remember to like and subscribe if you liked the video. Let's get to it. Elf Beauty. Welcome, guys and gals, to the channel as we take a stock analysis on Elf Beauty. The fair trade, the vegan, the clean machine, no cruelty at all, beauty products that this company sells. It also has so it's got its wow people. It's got its the Elf Cosmetics, the Elf so they've got a few different metrics out here, and the Soul Card part of the company as well. So they are well diversified and are very much a profit making machine. And this is when we look at the revenue, you can see why. $578 million in 2022, up from $282 million in 2020. And it looks like it's going to push its way up and away towards the 700 million in 2023. So this is just absolutely off the charts sort of stuff going on here with Elf Beauty. Net profit is looking at around 100 million in 2023, from 61.5 million. This is just 40%. This is just absolutely off the charts sort of stock. No wonder people are getting excited about this company. Absolutely ridiculous. The earnings per share are 2.4, very good as well for the size of this company. When you got Amazon at 2.17, wow, this is just craziness. The PE ratio is getting real high now at 56, so is their growth going to continue? That's going to be the question mark on the stock, the biggest question mark. They can continue to grow and grow and grow like the behemoth they have been of late. That's going to be the big question with Elf Beauty, if they can continue to do this or not. That's going to be the big question mark going forward. No dividend with this company, so you don't worry about a dividend because they're not paying one. Again, this is a possibility down the track, but I don't see it anywhere in the near future. Assets, current total assets of 659 million, up from 487 million in 2021. Cha-ching there. And on the other side, very positive, the total liabilities, 184 million, down from 217 million in 2021. So absolutely beautiful. The assets are going up and the liabilities are going down. This is a perfect storm, and you can see why everyone is not everyone, but a lot of people investing into the stock. This is probably the concerning part. The free cash flow is right now at 22 million. That's decent, up from minus 10 million in 2020. So look at that, that's very, very good. But you have to factor in 2018 they had 18 million. So now they only have 22 million, even though they had a big loss. So that's very good that they got themselves back up with the Rona situation. So you can understand that point of view, why that happened. But people still do buy cosmetics at their level. But so if they can continue to keep that free cash flow rolling again, the stock could just keep going up and up and up. Long-term debt, 86 million, very good. If I was looking at the free cash flow, I'd be probably looking to get rid of that debt now with the high interest rate. You just get rid of it, and that's done. You don't have to forget about that, and then focus on maybe an acquisition on the line. They need to really build up to get to any acquisitions, but there's a possibility with this company going forward, and something I would see a bit of value in Elf Beauty getting into buying more and get a bit more of a conglomerate going on with their company. Now, this is the only thing that is concerning for me, is the shares outstanding. is at 54.4 million from 50 million of 2020. So they are diluting you. Even though stock appreciation has gone up, they diluted you. They've issued more and more shares, more stock compensation. Not good at all for using the investor, but to be honest, it's the only bad thing. But they continue to take the profits of all the shares money coming in. That's why, if they're spending it wisely, then it's okay by me, but it's not a great metric. But it's the only really bad one on this list. So can you complain? Yes, what is Elf on the Shelf, Elf Beauty, the beautiful souvenir? What do they need to continue? Just continue doing what they're doing. Growing. If they can continue to grow, and their revenue and their profit continue to be very, very good in between, well, this company, the sky's the limit, and the stock price doesn't matter if you're looking at it. And that sort of thing. If you think it's going to continue to go to the moon, just keep buying, not financial advice. But you're here to understand intrinsic value and where this company is at current metrics, where its worth is compared to its stock price now, and where the future beliefs are going to be. Is this company way overvalued or undervalued? Let's find out right here, right now. So we're looking at the share price at about $135 with earnings per share of about 2.4 to 4.8. Now this is that's going to be the big one. We're going to look at a double from where it is now to see where the stock price is. But if we look at the share price at $135, the current earnings per share at 2.4 with a growth rate of 5, you're looking at an intrinsic value of $46. So if you're scratching your head right now as what the hell would I buy the stock, you have to look at the next metric. If we added that up to 10% growth at the earnings per share of 2.4, you're looking at $89, and you're still undervalued by nearly 50%. So you're really not going anywhere. But if we double the earnings per share, and that's where you got to hope the earnings per share goes in the future. I don't know if that's logistically going to happen at the moment, but then you're starting to look at just over fair value, and you're getting some point. So that's where you got to see, can they get some more earnings per share, or can they double their growth? Can they go to 20%, continue to keep up this higher rate that they have been doing? If you can see that happening, then you start looking at a $200, $300 stock. So if they can continue to keep this growth rate going that they have been doing, which has been outstanding, if they continue to do that, you buy the stock every day of the week. So that's the question mark. Do you believe they're going to continue that? I doubt they're going to continue the way they've been soaring the last few years. I can see it happening for maybe another year or so if we don't have a recession. But at some point, it's going to stagnate. So do you want to pay for that now and hope that it's going to get there and go flying past it? Or do you wait for a dip and then buy, and then the company might just go sideways from there? That's the big question mark. Where do you think that the ceiling is Elf Beauty? Because the Elf Beauty ceiling could be $300 right now. So it could be a double up from here. If you believe the current metrics, it's actually more than that. It's probably $1,000 shocks on current metrics if they keep going like this for another 10 years. It would be $1,000 stock. I don't see that happening, but if you believe in that, then it's probably a buy all day and not financial advice. Do your own research before you invest into any stocks. But at current metrics, it's a bit of a big iffy one for me. If you want to be very safe, you'd have to probably get it to half the price now. Get to about $60, $70 mark, then definitely would be more valued play then. But at the moment, you're just hoping the future is bright to keep buying the stock at current metrics. But yeah, if they continue to grow the revenue group, then this is only the start, and this company will be a big stock. It already has flown already, so whether it continues, it's up to the stock. If they keep performing like they have been, then anything can happen. But anyway, that is the stock analysis and intrinsic value of this great company, Elf Beauty, and maybe a stock for you to invest into. Remember to like and subscribe to the channel, share this video with all your friends, and have a great day out there.